In today's webinar, we will talk about the S&P 500, and using the forecaster terminal, we will try to understand if the drop is gonna last, or we are already at the end of this downward movement. We are at the end of this bear trend. Okay, so let's start to um, let's say to put the situation in context. Okay, it's very important to understand that, for example, at the moment, in the last 1 month, we had a drop in the S&P 500 prices of something more or less 8%. And we have to contextualize this situation, because if we go back in the last 3 years, as you can see, we find a really bullish market. Okay, so it's always important to understand which kind of drop we are experiencing. At the moment, we are having a drop which is really small compared to the upward movement we had in the last 1 or 2 years. Okay, this is something really important to understand, and we have to keep it in mind when we analyze the situation. Okay, first of all, I would like to share with you the seasonality. Okay, because if we, for example, plot on the chart the 5, 10, and 10-year seasonality, I can zoom a little bit so you can see much better. Okay, as you can see, what happened in the last weeks, it's something that already happened in the past. Okay, and if we also add the current price, which is the current year price, as you can see, the correlation of the current price with the 5, 7, and 10-year seasonality is very high, because we have 84%, 81% with the 7 years seasonality, 81% with the 10 years. Okay, and every time we analyze the market, it's very important to understand what the seasonality is telling to us, what we can expect from the market in a specific time frame, in a specific period. And in this case, thanks to the correlation, we know in advance, we know real time, if prices are moving like they did in the past years. Okay, and this was the case, guys, because as you can see, both in the 5, 7, and 10-year seasonality, we have a very high correlation between seasonalities and prices. But what is very important to understand is these statistics, because look, if we go back in the last 5, 7, and 10 years, what we can see is that the average return for a long trade in this specific period, in the last 10, 7, and 5 years, okay, the average return was 1.9, 2.1, and 3.1%. But if we switch to a short trade, what we find is something very interesting, because we can find more or less the same odds, let's say, because as you can see, in the last 10 years, in the past 10 years, we have 60% of long trade, 57, 40%. But what change if we switch from long to short? is the average return. Look, in the last 5 years, doing the average for all the different years where we had a short um, a short trade, a positive short trade, we had 12% in average return. We had in the last 7 exactly the same average return, 12.6, and in the last 10 years, we had 9.8%. As you can see, the average return, if we switch to a short trade, always in this specific window of time, it's much higher, okay? So it means that in this specific period we are living right now, and this is exactly what is happening right now, okay? If markets goes up, they tend to goes up very a little, okay? If market goes down, markets tend to drop a lot, exactly on this average 12.6 and 9%. Okay, so what is happening right now is something that already happened in the past, and this is the first the first point I would like to share with you today, because what we are going to do right now is analyzing the S&P 500 with all the tools you can find inside the Forecaster terminal. Okay, so seasonality speaking, what is happening right now, it's something that already happened in the past, and so it's something which is not strange at all at the moment. Okay, perfect. So something else that we have to analyze in order to understand if a bear trend like the one we are experiencing right now will last for a long time or not, it's the fundamental analysis. Okay, in real time we know if the markets is undervalued or overvalued. How we know that? Very simple. For every company all across the globe, Forecaster Terminal calculate the fair value thanks to three different approach. One is the discounted cash flow, one is the Peter Lynch formula, and the other one is the economic value added formula. We do an average of these three different fair value. We calculate thanks to this simple formula that you can learn at the economic university. Okay, and in real time we know if which is the fair value for every company listed across the globe. Okay, we know which are the components of a specific index, like we are doing right now with the S&P 500. And what we know, thanks to this calculation, is the entity, is the level of undervaluated or overvaluated. And in this case right now, guys, the S&P 500 is already undervaluated by more than 17%. This is something extremely interesting, because at the beginning of the year, we were at the all-time high for the S&P 500. We can go here and we can see the chart. And we said, guys, this year, or every time something will happen all across the globe, the markets will drop, because the index is already overvalued. If you remember, if you goes back to our previous webinar, and you can find all our videos here on our YouTube channel. Okay, if you remember, if you go and you see the video, you can find that when we were at the all-time high for the S&P 500, the entire index was overvalued, just a little bit, few points, okay, but it was overvalued. And this is something that big investors know, okay. Right now, after a 8-9% drop from the all-time high, the S&P 500 is already undervalued by 17%. This is something really interesting, guys, because I don't know if you remember, because maybe you know forecasters since a few months and not many years, but this level of undervaluation, we have to go back in 2022 to find this level of undervaluation, okay. And if you already if you know me since the 2022, maybe you remember I always made videos talking about the situation all across the globe. They were talking about a very bad situation for the economy, and the stock market will drop because of the crisis, because of everything. All we had all the problem in this moment, and I always said, guys, the market is undervalued, okay, and this is something that really can let the market goes up, because when we have a market which is really undervalued, big investors tend to buy, okay, and this is exactly what's it's happening right now. We have the entire S&P 500 which is undervalued, and this is something really interesting, because as I told you, we have to go back in 2022 to find an S&P 500 undervalued by 70%. Okay, really interesting situation. Something else we can evaluate in order to understand if this drop on the stock market is gonna last or not is the COT report. Okay, COT report is very interesting because can tell us if the big investors are buying or selling futures of the S&P 500 in this case. And if we go here and we highlight the non-commercial section of the COT report for the S&P 500, we can see something really interesting. And as you can see, look, hedge fund and institutional traders are buying this drop. Look, and every time in the last 2 years, they have been long with their net position long. Okay, the market made an important low. Okay, and this is exactly what is happening right now. I mean, on this drop, they bought. Look, and since the beginning of 2024, their net positions are going up. Okay, they are building a stronger and stronger net long position, and this is something really interesting because it tells me that they already know that the market is undervalued, and then when something is undervalued by 17%, nobody's gonna sell anymore. They start to buy, and this is why they are building this kind of position. Okay, let me see your questions, guys. Dan is asking, are the both position not too less in relations to the last undervaluation? Actually, I don't know, because of course we have data, and of course we we can analyze the chart and we can understand if they are playing long or short. But what we can see from the data is that they are buying right now. Okay, hedge funds are going long. They are betting on the long side of the market. Okay, and this is very, very interesting because they are not scared. And I believe, I'm not an institutional trader, but I believe they are not scared because if we analyze the entire S&P 500 on a fundamental basis, okay, we can really understand the market is undervalued, okay? And look, so we saw the seasonality, we saw the fundamental part of the index, and we understood it's undervalued. We saw the COT report where we can understand the institutional traders and hedge fund are buying. We have now to analyze the overbought and oversold page, which is where we can understand if it's time or not to buy. Okay. And in this case, as you can see, we have a very interesting situation. So Martin is asking me, what does the non-commercial position means? Very simple. You can go here in the COT report. You can go here on the S&P 500, and for every voice you can find on the forecaster, you have an info box. Okay. And for example, for non-commercial, as you can see, you find the description for this category. And this category, the non-commercial one, include professional money managers like CTAs, CPOs, and hedge funds. Okay? That's it. As always, everything you can find in the forecaster, you can find also the explanation. The aim of the forecaster is not to be a black box, but we would like you to have reliable data you can trust and you have to understand. So this is why everywhere on the forecaster you find this little info box that tell you exactly what you are looking at. Okay. Can the forecaster know which sector is undervalued? Of course, Ali, because if you go here in the ranking page, you can choose, for example, every different sector for the S&P 500. And for example, if you go here in the healthcare, as you can see, it's really undervalued by 20%. Okay. So if you take the whole 500 stocks, you find an undervalued situation of 17, but you can deep dive and you can go, for example, in the top 10, in the top 30, in the top 50, and you can go inside the specific sector where you can find, for example, not only the undervaluation in this moment, but you can also see all the participant for this sector, and you can also rank them for the best to worst. You can go here and you can see the ratios. You can go here and see the price change if you are a momentum investors or a momentum trader. Okay, you have everything. Okay, anyway, we are now, as I told you, we saw the seasonality, the COT report, the fundamental part with the fair value for the index. We are now on the overbought and oversold page where we analyze prices with technical and mathematical tools in order to understand if it's time to buy or not. And in this case, guys, we can see something really interesting because look, yes, the market dropped here, and we have a lower low if we compare these prices, okay? We have a lower low compared to the previous one. The previous low, it was at the beginning of 2025. But what is interesting is this divergence with our indicator, the Wyckoff. This indicator tells us if the number of buyers are exceeding the number of sellers, and in this case, this indicator is telling us that the number of buyers increased if we compare this data to the previous low. And this is a bullish a bullish feedback from this indicator, okay? And we also have an increase in volume. And as I always say, high volume on a chart tend to let the movement, um, let's say in another way, okay? I never say it in English, so I have to find a way to to tell it, but very simple. When you have a spike in volume, okay, prices tend to change their direction, let's say, okay? And in this case, we have a very nice divergence. We know that the number of buyers here are more than they were on the previous low. And this is something very interesting because we have the divergence, okay? This indicator is working really nicely. It's really powerful because we see divergence. And when we have a divergence, prices tend to change their direction. Okay, this is something we can find also on the top. Look, here we had a higher high compared to the previous high, but look at the number of buyers. They decreased. In this case, we can say the number of sellers exceeded the number of sellers we had on the previous high, okay? And when we have a divergence, prices tend to change their direction, okay? So now we have to understand, is it already time to buy or not? We can go to have a look to the speed. As I always explain to you, this is a very nice indicator and another very powerful indicator because it tells us, okay, if the speed of prices is increasing or decreasing, okay? As always, you have all the explanation and you have the formula for this indicator, okay? And you have to imagine this is not the price of the S&P 500, but you have to imagine this is a car, okay? What we do is calculating the speed of the prices of the S&P 500 like if it was a car. We use exactly the same formula. You can use it in order to understand how fast a car is going on the street. We use it for the prices for every financial instrument all across the globe. And in this case, look, prices are not slowing down. Look, if we also go back in the 3-year, as you can see, prices are not slowing down. And this means that probably prices can go lower on the S&P 500 because at the moment they are on the highway and they are going down the street very fast and they are not slowing down, okay? Yes, exactly. Anil, velocity, speed is the distance, not minus, but let me check, divided time. Exactly. Okay, that's it. You have to imagine this is not the price. This is the a car, and at the moment, as you can see, we can also zoom a little bit in. the car is not slowing down. Prices are not slowing down. And this means that prices can go lower. Okay? So, where can they go? I mean, which level can they reach? Very simple. We have to go back to seasonality. Okay? And we have to plot again 5, 7, and 10-year seasonality. Okay? And we have to highlight exactly the period we are in. Look how close we are to an inversion, okay? Seasonality speaking. But look, here we are. We have to choose short. We have to go back in the last 10 years. Here we can find an average return of 10. Here we have 12.7, 12.7, okay? So we can expect from the all-time high from here a drop in prices of something between 12, 13, and 10%. Let's say 12, okay? If we go on a chart and we go to the S&P 500, let's go here on the Yahoo Finance. Let's open the advanced chart where we can calculate. Look, if we take the meter and we calculate minus 11, 12%, here we are. We can expect an S&P 500 drop a little bit more. We can expect to go here until 5,500 and a little bit more, okay? So from now we can expect another 2 or 3% of drop, okay? And that's it, guys. This is how we can use the forecaster in order to understand when prices are at the end of a trend. In this case, as you can see, we can also see that seasonality speaking, we are very close to a turning point. We know the correlation between current year and the past years is very high, so we are very close to an inversion, okay? So this is why I'm very optimistic for the future, because as I told you, fundamentally speaking, we are talking about an index which is undervalued, and big investors know. I was yesterday on the CNBC YouTube channel and I saw a very interesting video from Mr. Barron. I can share with you the video. Let me see if I can find it. Let me see. Yeah, here we are. This one. Look, this video is very nice. And this billionaire investor, which is Ron Barron, said, I can't believe how cheap stocks prices are. And this is exactly what I can find on the forecaster. Because at the moment, with the S&P 500, which is down only 8-9% from the all-time high, we can find an undervalued situation, which I have to go back in 2022 to find, okay? Remember, we can add the net income also, not only for every share we have on the chart, on the forecaster. I always show NVIDIA because if you go back for in the last 10 years, as you can see, the share price go exactly where the net income is, okay? And we can do exactly the same for the index. And at the moment, as you can see, the entire net income for all the companies inside the S&P is more than $2 trillion, okay, which is higher than ever, okay, but prices are going down. Of course, this is because Mr. Trump with Elon Musk are doing a lot of things in the United States. They are constantly talking about tariff. Yes, we put tariff. No, we take away tariff. And I mean, investor doesn't like this environment where the economy is right now. But at the end of the day, companies are growing. They publish every day really nice data. The economy is growing, and that's it. In the long run, the economy will go very, very fast. And at the moment, prices, this drop is creating a big opportunity, because at the end of the day, prices will follow this line, which is the net income. That's it. In the long run, this is the only rule we have to follow. Prices goes up in the stock market when and if companies publish growing net income. Okay? That's it, guys. Very, very simple. Okay? And this is why I'm very optimistic for the future. And I really think we are in a very interesting moment where probably we can see another 2 or 3% drop. But I really think we can go back to the all-time high very soon. Okay? Guys, thank you very much. See you next week. Hope you see you again next week. And we will analyze more companies and more opportunities. And wait, I have something else for you. We talked about the COT report, which is something really interesting. If we go to, of course, we have the COT report for, here you can find the COT report section for all the currencies, okay? And for all the futures you find listed on the SIBO and all the other one, okay? We have something really special, which is the synthetic COT report, which is something amazing. We only have, nobody else has synthetic COT report all across the globe. And look, what we do is taking the COT report, for example, for the euro, okay, the COT report for the sterling, the pound, and we create a synthetic COT report, okay? As you can see here, it's a synthetic. This COT isn't official. It was created by merging two contracts together, okay? And this is something really interesting because we have a data that nobody has, and we can find really nice opportunities. If we go here, look this chart. We are on the euro sterling chart, and as you can see, we are very low in prices on the euro GBP, but look, institutional investors and big traders are betting heavily on the long side for euro GBP. Look, for every drop, we have an increasing long positions on the euro GBP. And this is very nice because, as you can find in my previous video regarding the COT report, what we have to look for is a divergence between prices and the volume, the net volume we can find in the COT report. And this is exactly what we are experiencing right now. It's something we already had in the past, a situation like this one. Look, as you can see, it was here. Look, it we have to go back to all. Look, we can find exactly a very similar situation in this place. Look what happened to the euro GBP prices. Okay, very interesting, very powerful when we can find such a divergence like this one. It's very difficult to wrong. Okay, Norman, what does COT means? Very simple. COT report is a very special report that the Commodity Future and Trading Commission publish every week. The name is Commitments of Traders, and it's a report that they publish to help the public understand the market dynamics. Okay, every week the Commodity Future and Trading Commission take all the future someone bought or sold inside the future market, okay, and they report all the position. So we have the merchant, producers, and user, the swap dealer, the managed money, and all the other categories. And for all these categories, for every future, you know if they are long or short. Of course, this is the kind of document the CFTC give to you. It's impossible to understand, okay? So this is why we take all the datas and we plot it on the chart, and we create a more user-friendly interface. You can use it to analyze, okay? Anil is saying, I'm very surprised today. Nobody asked if this webinar will be recorded, but yes, it will be recorded and you will receive it in your inbox. Okay. Norman, okay, that's excellent. Your charts make a lot of more sense. Exactly. And that's it, guys. You can go and find all the opportunities you want. Also for the synthetics, which are very interesting because actually it's data that doesn't exist, but we merge, in this case, euro data with GBP data, and we obtain something really, really interesting. Okay, guys, thank you very much. If you have any question, remember you can reach us in the chat. You can find here on the Forecaster.biz website. You can also scroll down and you can find our contact page here. Here we are. And you can also find our email somewhere. I don't know, because we changed the website very recently. But anyway, it's info@forecaster.biz. If you like our software, I really need to ask you a favor. If you go to Google and write Forecaster.biz, you can find here the Google review page. If you have 1 minute, please go and write a review for us. It's very important because it helps us a lot for let our software know abroad and not only in Italy. As you can imagine, I'm Italian from my accent, and we are very strong, of course, in Italy. As you can see, we have many users in Italy, but we are trying to go abroad, and we really need your reviews in order to let Google know we are a serious company. Okay, if you have 2 minutes and you go to Trustpilot, thank you very much. And if you write us a review also here, I can share with you the link. Thank you very much, because it will help us to go abroad. Thank you very much. Sven, best investment in trading ever for me. Thank you very much. I'm really happy when someone tell me that our software, they love our software. Every day more people use it, and we are very happy because we are improving it a lot. And in few weeks, we will give you an update inside the forecaster that you truly will love. Really. Thank you very much. Guys, see you next week. Bye bye.